Hello and welcome to the Mortgage Minute, brought to you by Advantage Home Mortgage. I'm Ben Cason. I'm one of the hosts. I'm here with Vern Larson, and we're going to talk a little bit about what mistakes you need to avoid whenever you're going through kind of the home buying process, specifically the end part. Once you have a contract signed, what financial things do you want to avoid? We already did part one of this that came out last week, so go check it out on Apple Podcasts and Spotify, then come back. If you've already seen it, let's go ahead and get right into it. Let's get into the good advice. Let's go ahead and take it away, Vern.
So let's move on to the next one. What else are we avoiding here?
Okay, what we're going to avoid when you go under contract is any kind of cash. Okay, so I know it sounds crazy weird. I've been saving up in my sock drawer for 6 months, and I've got $5,000 in cash. We don't like cash, okay? All lenders do not like cash because we need to know where the money is coming from. The reason behind that is back in the good old days when there was some mortgage fraud, people, the sellers would actually give buyers the down payment. So I'd say, hey, Ben, you should buy my house. Here, I'll give you $5,000 so you get, a little bit better loan because it looks like you're putting $5,000 down, and then we'll just make the house sell for $105 versus $100.
Okay.
And so then you get a little better home loan.
Yeah.
I still get the same amount of money, and it gets covered in the appraisal, and nobody loses anything. But, that is what really kind of put us in a bad position. And so now all funds that coming to the table are going to be sourced. Anything coming in cannot come from an unacceptable source. So I couldn't give you the money. The seller couldn't give you the money. Any of the real estate agents couldn't give you the money. Those are all interested parties to the transaction. They have something to gain by this thing going through.
Sure.
So that money can't come from them. So any money that's in cash is not it's not good. We're not going to be able to use it. So if you do have cash, we're going to have to work with it.
Gotcha.
The easiest thing to do is get it into a bank account, wait 60 days, and you're good to go.
Okay.
So once it's in the account for 60 days, you're good because we assume, hey, it's your money.
Yeah.
Obviously, somebody's not going to just indefinitely give you $5,000 and let you hang on to it. So
Sure.
It's got to be in your account 60 days, and then we're not going to have an issue with it. So if you are thinking about buying a home and you're out there and you have cash, go get it in a bank account right now. Get it in a savings. You make a little bit of a little bit of interest on it, and it'll be safer than having it in your sock drawer.
Gotcha.
So go get it in the bank.
Smart. And then can you kind of like walk me through like that scenario you said, for example, the guy who sells it for 105 and then gives him the $5,000. Like why is that bad on your end? Why is that a negative?
On our end, because I really wanted to buy the house for 100.
Yeah.
And then they're making the numbers go higher. So then that makes the house worth more on paper than what it really is. And so it creates like a fake market. It creates like appreciation that's not really there. And that's really bad for buyers, sellers, lenders. It's bad for everybody because then, the house really isn't worth that. And
Sure.
you go to sell it to the next person and
then they're going to see it sold for 105 and, they only want to pay 90 for it, for example.
Right. So that it created a lot of problems, and it's just, it's dishonest and it's bad. It's mortgage fraud. So that's, we don't want to do that. I don't want to lose my license.
Sure.
I love doing loans. So that's anything that's
That makes total sense. Yep.
bad, we don't want to do. And it's really misleading because you're getting a better loan than you should have got because now you have $5,000 down versus having $1,000 down.
Yeah, sure. That totally makes sense. Yeah. Thank you for walking me through that. Yeah. I mean, it's just interesting stuff. Yeah.
I've been doing this for 23 years, so I've seen it all. Seen it all for the most part. So I've been through some of the ups and downs of the mortgage industry. So I definitely have seen it all.
Yeah. So like your advice then, if I was somebody who'd just been saving up cash for a long time and all of a sudden want to buy a home and use that, is to get it into a bank as soon as possible then.
Get it into a bank as soon as possible. Have it ready because we're going to need that 60-day history. Okay. So get it in the bank as soon as possible.
Gotcha.
The other scenario that kind of works with that is if, a mom and dad are willing to gift you the money.
Oh, we were talking about this last time when you were in here.
Yeah. So if, you're like, Dad, I really messed up. I have my $2,000. It's in my bank account or it's in my sock drawer. They're saying it has to be in a bank account. Would you be willing to gift me the $2,000 to get this transaction done? And if the dad says, of course, here's I'll take it out of my bank account, put it, into yours, transfer it over into yours, and we can paper trail it, then that's completely fine.
Good.
Obviously, the gifter is going to sign a letter saying they're not expecting any repayment of these funds. So that's what a true gift is too.
Sure. That makes sense. All right. Thank you, Vern. Yeah. So after that one, so like you're saying, be careful with cash as a general rule. Now let's move on. What's the next thing you're trying to avoid?
Bank statements are just a mess. Okay. So when you bring your bank statements in, we're going to ask for all pages. I know it sounds silly, but some bank statements are like page 1 of 6. Page 6 may say, this page is left intentionally blank.
Yeah.
We want it. Like, you got to bring it in. So we got to have all pages. So it's really a hard thing. Any deposits that go into your account, anything over $500 is going to need to be sourced and seasoned if it's non-payroll.
Gotcha.
So if your payroll comes in, it says target distribution, boom, and it comes into your bank account, we're not going to care. But if you had a yard sale and you sold a jukebox and you got $1,200 in cash and you drop it in there, then we've got a problem. You know what I mean? Because we can't source that money. Again, we don't know where this $1,200 came from. Even if they wrote you a check, if we don't have a title or something to go with it, it's going to be a problem. So again, get your money in those bank statements 60 days ahead. We're going to need 2 months, and we're going to need all pages, and you can't black anything out. You can't, we have people.
Full transparency.
Yeah. We have people like black out their account number, black out maybe you had like a crazy night at the liquor store and you spent, $400 at the liquor store and you blacked out that transaction because you don't want us to know that you did that. You can't do that stuff. We've got to have, everything's got to be perfect, 6 pages of the bank statement. So that's the other thing that we just have a heck of a time with people is, putting money in from whatever it comes from. And it's amazing. So if you're starting the process, you have some cash, but you have enough in your bank account, don't deposit anything else. Just leave it in there. Leave it good. If your loan officer says it's good, then let it go.
Gotcha.
Don't try to just jam 3,000 in there because you think it's going to look better, because it could create you a massive problem.
That makes sense. Yeah. Hey, thank you, Vern. I appreciate it. Yeah, that's a lot. That's a lot of good stuff to avoid. Like, I always get you on here and I'm enlightened about stuff. you got all kinds of cool stuff to talk about. I mean, let me ask you this. So say I'm in a spot where I'm already doing a mortgage like this and I'm working in it, but I've noticed after talking here, I've made one of these mistakes. What would be my next step?
You would just want to let your loan officer know.
Okay.
You would just say, I went and deposited money. What am I going to do?
Yeah.
And then, there are some workarounds and some letters of explanation and things we can do.
Sure.
If it becomes a problem, we're probably not going to end up losing a loan over $500.
It may not be a deal breaker depending on
Might not be a deal breaker. We'll probably work through it. Again, it's just like everything. If you have a loan started and you're going to get furloughed, let us know. If you're going to change jobs, let us know. If you need to go buy a car because your transmission flew out on I-25, let us know. We'll work around it. We just need to know what you're up against, and then we can run numbers and say, hey, you're good as long as you keep your payment under $340. You go to the car dealership and I'm sure they'll keep your payment under $340 or find a way to do it. You know what I mean? So we'll work with you as any way we can.
Gotcha. That makes sense. Hey, thank you, Vern. I appreciate it.
All right.
Yeah,
thanks, Ben. Awesome, man.
Give me just a second though. First, let's ask how do they talk to you? If listening to this, obviously you hear all of the expertise Vern has, and you're like, yeah, I'm working on a home loan and I want to work with this guy. How would they get to you?
So we are always available by phone at 719-546-3100. And we are really, enjoying this online application stuff we have.
Oh, yeah?
Yeah. So if you go to our Facebook, the Advantage Home Mortgage, Vern Larson, there's an apply here button.
Okay.
You can just click there, and in your pajamas, the middle of the night, it walks you right through all the questions I would walk you through. And you can apply. And in the morning, I get an email and says, so-and-so applied, and we can get you taken care of the next day. But always welcome that phone call. So we're local. You can stop in and see us too. We're up on the north side, 4601 Eagleridge Place.
There you go, 4601 Eagleridge Place. Thank you so much, Vern. That's Advantage Home Mortgage. Thank you for coming in, as always. Mortgage Minute. I love it. So
all right. Thanks, man. We'll keep it going.
And check out more of the Mortgage Minute. We've done a couple episodes already. We did kind of a Vern's background and talking about advice for young people when it came to mortgages early on. We did 2 episodes of that, and then we also did the credit hacks if you had bad credit. Like me, I have very little credit. So
I wouldn't say you had bad credit. You had no credit, which is tough too. But yeah, you're on the right track. I'm glad I'm going to start getting getting you in a house here soon. So we need to talk about your down payment, man. What do you got? No,
Hey, let's work on that right now on the podcast. No, that sounds good. And yeah, check out all those things as well as all the future podcasts we got coming out, because we're going to keep doing these. These are really good advice. So make sure you come back right here to the Mortgage Minute right here on Spotify and Apple Podcasts.
The next thing we're going to look forward to is going through different types of loans.
Okay, perfect.
All right.
Sounds good. See, I don't know anything about that. I'm just coming to get enlightened every week on the Mortgage Minute. Thank you so much, Vern. I appreciate you.
Thanks, Ben. Talk to you soon.
And thank you so much for listening. Have a great rest of your day. Check out the rest of the Mortgage Minute and Advantage Home Mortgage. Thank you.